I'm Georgia Brew, and you're listening to the Passive Investor Show.
Welcome, PI listeners, to the Passive Investor Show. I'm John Fortes. Our goal and purpose of this show is to be a resource to passive investors and help them master their investments in real estate funds. Today's guest, I'm proud and honored to welcome Georgia Brew, CEO of Elevate Commercial Investment Group and owner of JNT Construction. George is a full-time, active and passive investor in multifamily real estate. He has 1,720 doors on the GP side and over 1,400 doors on the LP side. He currently has another 850 doors under contract on the GP side as well, and as he is a very, very busy man. And he's the CEO of Elevate Commercial Investment Group. He also has his own construction company that focuses on helping multifamily investors with their full renovations. He's based out of Dallas and currently owns properties in Dallas and Oklahoma, but open to other areas as well. His strong points are locating deals, due diligence, executing CapEx, and raising capital. His goal is to reach 10,000 doors by the end of 2021 by creating strategic partnerships and implementing the proper systems in place for scalability. Welcome to the show, George. I'm glad to have you on.
Thank you, man. I'm happy to be on.
Well, so let's jump in and dive in about your background. Tell us how you got here.
I'll start you off back in when I was going to college, and I studied to be an engineer. I got an electrical engineering degree. Right before I graduated, probably my last year, my senior year, I knew that I didn't want to be an engineer. I knew I didn't want to be, stuck in a cubicle. And I took that year and I really started focusing. I started reading up and seeing what other successful individuals did. And a lot of that led back to real estate investing. At that point, I decided that was the path I was going to pursue the most. I still got my degree. I still went and got a W-2 in an engineering department at UPS. But at the same time that I was doing that, my side hustle was real estate investing. Reading a lot of books, got a mentor to help me with coaching as far as single family homes, and started doing some flips after I realized that it was sustainable and I was doing a consistent amount. I quit my W-2 and I went full-time into real estate investing. That was about 13 years ago. In that path, as I was trying to scale, I decided to open my own construction company. That was about 10 years ago. And it worked. I mean, it definitely helped us scale and take our numbers up as far as fix and flips. About 3.5 years ago, kind of looked back at what I had built, and it was very transactional. As far as the money coming in, it was from one deal to the next, one to the next. I had done some holds, some single family ones, some smaller multifamily, but I hadn't built that wealth that I really wanted to, and that I had seeked to do in the 13 years ago. So at that point, I started looking more into multifamily. Luckily, I had a couple clients that were multifamily investors on the construction side. They were multifamily syndicators, and as I got to talk to them a little bit more, it opened up my eyes to the fact that I could actually purchase a 200 plus unit apartment, which hadn't even crossed my mind till then. And that's when I started doing, digging in and getting educated on multifamily. Then started just digging right in, looking for some deals, doing underwriting, lots of underwriting. And I decided, so at first I tried doing the single family and the multifamily together. I just realized if I really wanted to grow the multifamily, I needed more focus. So I made some moves with my construction company to take me away a little bit more from the day-to-day, brought in some key team members on that end, and decided to just stop doing single family altogether and go all in on multifamily. And that's where I'm at now, man. I'm all in on this and looking to scale.
I love that. I love that. Sounds like you did a little bit of what I did, where we hit the Google machine and said, "What do the wealthy do?" Right, and then
back then Google wasn't that big, but yeah.
Absolutely. Yeah, you're right. But nowadays it's Google,
Yes,
and then we're going by the books. I get it. So walk me through that decision to start your own construction company and how it separates yourself as a sponsor and syndicator today.
No, yeah, I mean, that was pretty crucial, man. So, once we decided we really wanted to focus on fix and flips, we ran into a couple issues with general contractors, and which I know a lot of investors have. At that point, I realized, okay, well, if we're going to scale this and we're going to do 40, 60 homes a year, whatever it's going to be, we really need to have that piece down. I've got an uncle that owns a construction company. I worked with him through college for a bit. My actual job when I graduated university, it was the engineering department for UPS, but I mean, it was more of being a general contractor. I was, any additions to the warehouses, we had to replace the roof. I was the one that managed all that. So I felt like I could do it. I could take it on. So at that point, I went ahead and did it, and learned a whole lot about construction since then. And it really allows me to evaluate a deal a little more detailed, not so much guessing, so that when you get into the actual project, you don't get hit sideways with something.
So today you're a sponsor and you still practice both. Tell me how that comes hand in hand for when you're, one of those deals that something hits you sideways. How do you tackle that with your experience?
I mean, it shouldn't. So we do a lot of work on the front end. During our due diligence period, during the whole transaction before we close, we do a lot of work on what the deferred maintenance is actually going to cost us, a lot of inspections, what the upgrades are going to cost us, the cosmetics. Then, we take it to a couple weeks before closing. We have pre-construction meetings. We have our crews set up to go. We've got our project manager either assigned, or if it's a new area, we've got them hired, we've got them trained. So a lot goes into, for when we close the deal, we can start right away and we don't get hit sideways with something. Things still happen, and actually just posted on social media yesterday about some plumbing issues we ran into. And even though we did the inspections and we did everything, we thought we did everything right, we didn't have our preferred plumber for that inspection. He was tied up, and this was he wasn't able to travel with us. So this one plumber that we had out there didn't inspect every single main sewer line. One of the lines he didn't inspect was collapsing. But luckily, we took the time on everything else, that we didn't go over on any other items, and we had our contingency, so it's not hurting anyone as far as taking care of that. If we hadn't done that, I mean, that could hurt our returns. We could, not know where to get the funds from. It can lead to other things.
I love that, and I love how you said it shouldn't when you started that, because with the proper due diligence, I mean, nothing should be a surprise if you're putting something under contract. I love that, George. Thank you for explaining and walking through that. So let's take a step back too. So when did you start working with passive investors?
That's a great question, man. So that was the one thing, coming from single family, from the construction company. On the single family end, we had a couple private lenders, but we had never raised millions of dollars to close a transaction. So on our first deal, we actually teamed up with another general partner that was their go-to. They had raised equity. We found the deal. We were the boots on the ground. We did the due diligence. We did the CapEx, but we didn't bring any funds to the table as far as raising for the equity. And then on our second deal, by then I had already started to build the platform on social media. I had gone all in on networking. I mean, I was literally going to every single event and meeting everybody I possibly could. Our second deal was my first experience in raising funds. It was eye-opening. I mean, it's like you never really know who's going to invest until you actually are ready to take the funds. We were able to raise what we had to raise for the deal, so we came through. But it told us a little bit about our contacts and what we had. So we've been building on that since.
Yeah, absolutely. That first time helps you build those processes to help you understand who's committed and who's not. So you're not having you're putting up a wall and making your investors go over that wall, or opening the door for that wall for them to get to that other side to see the opportunity. So creating the processes and the systems comes from the first time. I love that. That's literally the process of the first time it happens, and a lot of people don't understand that. So I love the fact that you painted that picture, because that's the first time it's been brought up on a show like that. I love that, George. What kind of impact has this had on you and your investors as far as opportunities, whatever your investors are basically? I would say, how has this benefited both you and your investors?
Yeah, I mean, it's been great, because I mean, the opportunities that we're finding and the returns we're able to offer to our investors, it's nothing like the single family deals we were doing. And it's just a great opportunity. I get excited when I have a deal to present to investors. This is something, unfortunately, that a lot of people don't even realize you can do. They think they've got to put their money in a retirement plan, 401 or IRA, and or they've got to go invest in stocks, and that's or mutual funds. That's all they know. The real returns are made in deals like this, in multifamily or other real estate assets, and I get excited, man.
I love the fact that you said that. That's the second time. James Eng said the same thing. When he gets a deal as a passive investor, he gets excited about the deal. Mm-hmm. I get excited as well, just like you, when we come across a deal and put it out there. So that's another great eye-opening as the sponsor on this. I love that. So what's one thing you had to implement that quickly helped you scale on passive investing, on raising capital?
Using a CRM, keep track of everything. We've got a big database, and we have to know how to segment our list and how to be able to follow up with investors, constantly stay in front of them. So yeah, I think implementing the CRM and then making sure our team is using it. And I mean, it's a daily process, but it's gotten a lot better for sure.
Absolutely. Systems and processes. Yeah. Can't stress it enough. But one thing I want to go back on, and you mentioned it earlier, is you kept going to conferences and putting yourself out there and stuff and meeting investors that way. And that's how me and you met at the conference in Dallas last year. It was finally good to meet you in person and get off virtual. So that was pretty cool. George, one piece of advice for the PI listeners.
For a passive investor, do your homework. There's a lot of deal sponsors out there. Take the time to look them up. Take the time to call some references, and don't just jump straight into a deal because it sounds good. I mean, there's a lot of numbers that can be tweaked on pro formas to make deals look better than they really are. Just make sure you ask the right questions. I've got a checklist I can send to anyone if they're interested in what type of questions they should ask.
I love that. George, before I give you the easiest question, I want to give you this one because I'm just a curious person by nature. What are the meanings behind your company names? That's one of my favorite questions to ask any business owner.
Man, that's a good one. Elevate investment company. We feel like we're elevating the wealth of individuals. So that's kind of where that came from. Just Elevate, and then Commercial Investment Group. Right now we're 100% focused on multifamily. I think eventually we may do more than just multifamily when it comes to real estate sectors. So that's why we named the Commercial Investment Group. And then J&T Construction. This is an interesting one. So it actually started as JMD This goes way back, which was a buddy of mine's in Florida. His company was JMD Developers, and we first started as a branch of that company, but then we decided to go off on our own, and a lot of people already knew the JMD. So my wife's name is Tasha. My name is George with a J, Jorge. So JNT, George and Tasha, sort of still sounds like JMD. So it just happened, man.
I love that, man. Thank you for allowing me to ask that question, man. Now, the hardest question of the night, how can we find you?
Oh, that's easy, man. You can find me anywhere now. I'm on all social platforms. If you just search my name, George Abreu, or actually, I don't know if you can see this. I don't know if it's mirrored correctly, but my site is elevatecig.com. You've got my email, which is George, Jorge, at elevatecig.com. What else I got there? Oh, jntconstruct.com.
Everything under one roof. I love it. Guys, it's been a great wealth of information regarding construction and passive investing. Thank you for coming on the show, George. Appreciate you.
Thank you, man. And like I said, if anybody feels free to email me, I can send them that checklist for the sponsor questions to ask.
Go get it.
Thank you, man.
You can never ask enough questions to a sponsor. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing.